Good morning, everyone. So today we'll be starting with the Customs Act. As you are aware, besides goods and services tax, customs is also in your course, and maybe round about 5 marks question can be asked from the Customs Act. So we are just taking an overview of the Customs Act. So fundamentally, when custom duty is levied, so custom duty is levied on importation of goods into India and exportation of goods from India. Now here, this subject matter is of the central government. The subject matter is of the central government. Why it is of the central government? Because it is covered in entry 83 of the Union List. The same is covered in entry 83 of the Union List, and in Union List, who has the power to make the laws? In Union List, the central government has the power to make the laws. So here the central government is empowered to make the laws. The subject matter is covered in entry 83 of Union List. And what entry 83 of Union List provides? That is, entry 83 of Union List is what? It's stating that the laws will be framed in relation to what? Duties of customs, including the export duties. So duties of customs including what? The export duties. Thus the power to make laws with respect to the customs with the central government. And whatever revenue proceeds will be there, the revenue proceeds from custom duty will be enjoyed solely by the union. Now here, in exercise of the powers, the central government has framed the following enactments. One is the Customs Act 1962. This is the basic enactment for levy of custom duty. It is the basic enactment for levy of custom duty on importation and exportation of goods. Importation of goods into India, exportation of goods from India. And provisions, statutory provisions have been made relating to what? The levy and collection of the custom duty, importation and exportation, what is the procedure there, transit and transshipment, prohibitions, warehousing, duty drawback, appeals. Likewise, various chapters are there and provisions have been made in the Customs Act. Besides this, we are having the Customs Tariff Act 1975. Now here in this tariff, this is basically for the classification of goods and what are the types of custom duties that will be levied. Here in the tariff we are having, for the purpose of classification, we are having 2 schedules. The first schedule, it is known as import tariff because it contains the goods which are chargeable with the import duties of customs. Then in second schedule, we are having what? In second schedule, we are having export tariff because the goods which are chargeable with export duties are covered in the second schedule. So the Custom Tariff Act 1975, this is for the purpose of classification of goods and the rates of duties. Besides this, delegated legislation is there in form of rules and regulations. Now in customs, rules, they are basically framed by central government and regulations are framed by Central Board of Indirect Taxes and Customs. And in Customs Act, wherever the word as prescribed occurs, that means regulations are framed by the Central Board of Indirect Taxes and Customs, which is the highest administrative authority there. Besides this, we have what? The notifications. The law is amended from time to time for which the government issues notifications. So there, together it is known as what? The body of the customs law. So basically, this was an introduction aspect. When custom duty is levied on importation of goods into India and exportation of goods from India. Basically, this term customs has come from the word custom. Now what custom? What custom is basically, it's a tradition. So whenever say, in ancient times, the merchantmen used to come from say outside India to India, they used to give gifts and offerings to the kings here. So that was a source of revenue basically. Then it was subsequently legalized. Now if any importation of goods takes place by either by sea or by land or by air, similarly exportation takes place by sea, land or air, custom duty is basically levied. As we have seen, what is the body of the customs law? Number one is the Customs Act 1962. It extends to whole of India, and in case if any offense or contraventions have been committed outside India by any person, then the provisions of the Customs Act will apply to in that case also. So here it extends to whole of India, and save as otherwise provided in this act, it applies also to an offense or contravention thereunder committed outside India by any person. Now basically the Customs Act contains the provisions relating to levy and collection of custom duty, importation and exportation, transit and transshipment, then we are having warehousing, we are having duty drawback. In case if you are not satisfied with the orders passed by the adjudicating authority, we have demands and refunds against the orders. We can go to appeal for settlement also. We have advanced rulings and offences and prosecution. So these provisions have been made in the Customs Act. Then we are having second is the Custom Tariff Act. Now tariff is for the purpose of what? Classification of the goods. Tariff is for what purpose? Tariff is for the purpose of classification of goods, and in case say if the goods are imported into India, at what rates the custom duty will be levied. The rate of custom duty on this mobile phone is different from rate of custom duty on the calculator. Similarly here, if a bottle is imported, the rate will be different. For that purpose we need classification of the goods, and the various types of duties are levied. Say it may be a safeguard duty, it may be an anti-dumping duty, it may be say anti-subsidy duty. So various types of duties are levied, that is also provided in the customs tariff. Now for the purpose of classification, we have made two schedules. First schedule is known as the import tariff. In the customs tariff we are having two schedules. First schedule is known as the import tariff, as it refers to the goods which are liable to import duties of customs, and the second schedule is known as the export tariff, as it refers to the goods which are liable to export duties of customs. Besides this, we are having rules. Rules, central government is empowered to make the rules. Section 156 of the Act empowers the central government to make the rules. So rules may be framed for valuation of goods. So we are having baggage rules, we are having say duty drawback rules. For valuation we are having baggage, we are having duty drawback, we are having. Then regulations are there. Central Board of Indirect Taxes and Customs, they have power to make the regulations. So wherever in the enactment the word say as prescribed occurs, that means regulations are framed. These both rules and regulations are delegated legislations. Then in regular course, amendments are made in the rules, regulations through notifications. So notifications are issued by the government. So central government basically has been empowered to issue notifications under various sections of the Customs Act 1962 and effective implementation of the provisions of the Customs Act. Now what is the charging section here? The charging section is in the Customs Act is section 12, that is basically dutiable goods. So here levy of custom duty is on importation or say exportation of goods. Fundamentally, we'll be discussing the charging section subsequently. Before that, we go to what various definitions, which are important definition. One is what assessment. What basically assessment in customs means. Here, we are determining the classification of the goods. Why we are determining the classification of goods? To find out the rate of duty. So, rate of duty on say the goods is say 10%. Now, 10% of what? 10% of the value. So, basically what assessment is? Determining the classification of the goods, determining the valuation of the goods, okay, to find out what? The duty liability. So, basically assessment is a procedure adopted for determining the duty liability by correctly classifying the goods and valuing the same. So, procedure which is adopted for determining the duty liability. So, assessment basically means what? Determination of the dutiability of any goods and the amount of say whether the goods are liable to duty or not, and determination of the amount of duty, tax, cess or any other sum payable if any under this act, under Customs Tariff Act, under any other law for the time being in force. Now here we are basically how the term assessment is defined. It means what? Determination of dutiability of any goods and the amount of duty, tax, cess or any other sum which is chargeable under the Act, under the Tariff Act, under any other law, and that is with reference to what? The tariff classification. The tariff classification of goods which is determined in accordance with the provisions of the Customs Tariff Act. Then value, that is value of the goods determined in accordance with the provisions of the Act and the Customs Tariff Act. Then we will be working out the exemptions and the concessions, if any, which are available in respect of duty, in respect of the duty, tax, cess or any other sum consequent upon any notification which has been issued under the Act or under the Customs Tariff Act. So, we will be determining the tariff classification, we will be seeing the value. This one was a classification, other one was the value will be determined. Then exemption if available, if there is any exemption, we will be working out the exemption. Then if specific duty is there, what specific duty means what? It is a duty on the basis of say quantity, weight, volume, measurement or other specific. So, here that will be determined, that is quantity, weight, measurement and other specifics where the duty is dependent on the basis of what? Quantity, weight, volume or other measurement. Then certain concessions are given on the basis of origin of goods, from which country the goods are originating. So, determination of the origin of goods. So, origin of the goods determined in accordance with the provisions of the Customs Tariff Act or the rules made thereunder, if the amount of duty, tax, cess or any other sum is affected by the origin of goods and any other specific factor that has impact on what? The duty, tax, cess or any other sum payable. So, fundamentally in classification you are determining the value, you are in value assessment you are determining the tariff classification, you are determining the value, you are determining whether the goods are eligible for exemption or not. If the duty is dependent upon quantity etc., determination of the same. If duty is dependent on the origin of the goods, then origin of goods is so determined and other factors they are determined. And assessment includes what? Provisional assessment, self-assessment, reassessment and any assessment in which the duty assessed is nil. So, here assessment includes provisional assessment. If you are not able to determine the classification, or say valuation, then you can apply for provisional assessment. On provisional basis, duty will be determined, you pay the provisional duty, execute the bond, we have to execute the double duty bond for the differential amount and then clear the goods. Or there can be, say, reassessment, there can be self-assessment, okay, and any assessment in which duty assessed is nil. Basically, that is the assessment. Then highest administrative authority here is the Central Board of Indirect Taxes and Customs. This is the highest administrative authority, CBIC. We will be discussing the same. Wherever the expression board means what? Board means what? The Central Board of Indirect Taxes and Customs. Then we have common portal. In GST also we are having a common portal. Similarly, we are having a common portal here, www.icegate.gov.in is the common portal in customs. Remember, here you can be asked with the multiple choice questions or say fill in the blanks. So customs portal means what? The customs common portal basically is the common customs electronic portal. Now this has been referred under section 154C of the Act. CBIC may notify a common portal to be called kya? Common customs electronic portal. Now why this portal is there? This is for the purpose of facilitating the registration. In case if you want to import the goods, you have to export the goods, you have to file necessary documents like bill of entry in respect of import or say shipping bill or bill of export in case of export. So filing for the bills of entry, shipping bills and other documents and forms prescribed under the Act, under the regulations for the time being in force, rules and regulations. Then for that, for payment of duty and for such other purposes that the board may by notification specify. Then conveyance is there. If you import the goods can be imported by land, it can be imported by air, it can be imported by say sea, for which we are having vessel, for which we are having aircraft and for which we are having vehicle. So this is basically conveyance. So here conveyance includes a vessel, aircraft and a vehicle. Conveyance includes a vessel, aircraft and a vehicle. Then we are having custom area. What basically custom area is? Custom area is the area of a custom station where the imported goods or export goods are ordinarily kept before clearance by the custom authority. So custom area means the area of the custom station, or it may be the area of a warehouse and includes say any area in which the imported goods or say export goods are ordinarily kept before clearance by the custom authority. Now we are having custom station, that means what? Custom port. We are having custom airport. We are having land custom station. Beside this, we are having international courier terminal and foreign post office. They are coming under the ambit of what? Custom station, if the goods are to be imported through post or courier. So custom station basically means custom port, custom airport, international courier terminal, foreign post office and land custom station. Then we are having say foreign going vessel or aircraft. This definition is important and can be asked in your examination. What foreign going vessel or aircraft means, as the name suggests, if the vessel or aircraft is proceeding from India to a place outside India, from India to a place outside India, it may be touching intermediate ports or airports in India or not, it it may be touching, may not be touching. The same comes under the ambit of, say, foreign going vessel or aircraft. Besides this, it also includes what? Any naval vessel of foreign government taking part in naval exercises, vessels engaged in fishing or other, say, any other operations outside the territorial waters of India, or say any vessel or aircraft proceeding to a place outside India. So, foreign going vessel or aircraft means what? Any vessel or aircraft for the time being engaged in carriage of goods or passengers between any port or airport in India and any port or airport outside India. They may be touching any intermediate port or airport in India or not. And it includes what? Naval vessel of foreign government taking part in naval exercises, any vessel engaged in fishing or other operations outside the territorial waters of India, or say any vessel or aircraft proceeding to a place outside India for any purpose whatsoever. Then we are having goods. Now section 222 defines the term goods. Goods basically includes vessels, aircrafts and vehicles. Goods include what? Vessels, aircrafts and vehicles, stores, baggage, currency and negotiable instruments, and any other kind of, say, movable property. Now definition of goods is very, very important. Remember, this can be asked in your examination. So it has been defined in an inclusive manner here. If vessels, aircrafts and vehicles are imported, they are also coming under the ambit of goods. Then stores. What is stores is, if any goods are used in vessel or aircraft, say if we are having aircraft fuel, that will be coming under the ambit of stores. Then we are having baggage. Baggage is coming under the ambit of stores. Currency and under the ambit of goods. Baggage is what? The luggage of the passenger. It is the luggage of the passenger who is coming to India, who is going from India, he is carrying luggage with him. So goods inside that luggage is the baggage. Then currency and negotiable instruments are coming under the ambit of goods, and any other kind of movable property. Now why currency and negotiable instruments? Because we have a power to prohibit importation and exportation of the goods. Therefore currency and negotiable instruments are coming under the ambit of goods. Then what import means? Basically import means what? Bringing into India. So from UK, you are bringing goods into India for consumption here. So this is known as what? Import. Bringing into India from a place outside India, that is import. And this definition can be asked in your examination. What is imported goods? So basically goods that are brought into India from a place outside India. These if the goods have been brought from UK, till the goods have been cleared for home consumption, they are what? Imported goods. After payment of duty, the goods do not remain imported goods. So after payment of custom duty, goods do not remain imported goods. So basically goods, imported goods means any goods that are brought into India from a place outside India, that are brought into India from place outside India, but does not include goods which have been, say, cleared for home consumption. Why? On payment of duty, the goods are, say, cleared for home consumption. We will be discussing this in our flow pattern of import, how the importation takes place. Subsequently, we will be discussing the same. Then who is the importer? So the person who is importing the goods into India, that is the importer. Say if I have placed a purchase order in UK for purchase of goods from UK and the goods are arriving here, so I am an importer. So importer in relation to any goods. Importer in relation to any goods at any time between their importation. At any time between their importation and the time when they are cleared for home consumption includes any owner or say beneficial owner or say any person holding himself out to be the importer. And here remember that the person in charge of vessel is there. Has to present arrival manifest or say import manifest that is presented in case of vessel and aircraft. containing the details of the goods which have been carried in the vessel or aircraft, or say import report is required to be presented by the person in charge in case of say vehicle. So here import manifest or say arrival manifest or import report means the manifest which is required to be delivered under section 30 that we will be discussing, and the person in charge of conveyance, the person in charge of conveyance has to present what? The arrival manifest or the import manifest in case of vessel or aircraft, and import report in case of vehicle in the prescribed form. Then we are having Indian customs water. So basically Indian customs water extends to exclusive economic zone. We are having say territorial waters of India that extends to 12 nautical miles. In sea we measure in nautical miles. Then we are having exclusive economic zone where we can exploit our natural resources, that is 200 nautical miles. So here Indian customs water means the waters extending into the sea up to the limit of exclusive economic zone, and basically it includes what? This Indian custom water includes Bay of Bengal, say Gulf, Indo-Gulf, say harbor. These you have discussed in geography also. Creek or tidal river. Why they are coming under the ambit of Indian customs water? Because if smuggling may take place through these Bay, Gulf, harbor, creek or tidal river, therefore they are also brought under the ambit of say Indian customs water. We are having international courier terminal. Basically it's a place which has been appointed to be an international courier terminal. Then prohibited goods. Government can place restrictions on importation and exportation of the goods. They can be absolute restriction, or they can be say conditional. So in case of absolute restriction, you cannot import or export. That is absolute prohibition, and there are conditions. In case if you fulfill the conditions, the goods do not remain prohibited goods. So prohibited goods means what? Any goods, the import or export of which is subject to any prohibitions under this act, under any other law for the time being in force, but does not include any such goods in respect of which conditions subject to which the goods are imported are permitted to be imported or exported have been complied with. We are having warehouses. That means a public warehouse which has been licensed under 57. We are having a private warehouse licensed under 58 and a special warehouse licensed under 58A. Here the goods can be imported goods, can be kept in these warehouses, can be kept in these warehouses without payment of custom duty. Okay. So these are the various definitions. Now this difference between rules and regulations can be asked in your examination. So here what are the basic differences? Authority who is empowered to make the rules is the central government. Authority empowered to make the regulations is CBIC. Section rules are framed under 156. Section 156 empowers the government to make the rules. Section 157 empowers the CBIC to make the regulations. Now consistency. The rules must be consistent with the provisions of the Act. Rules must be consistent with the provisions of the Act. Regulations must be consistent with the provisions of the Act as well as the rules. So difference between rules and regulation you must remember. Now section 12, this is very, very important. You read, this is very, very important. That is section 12. Section 12 basically is the charging section. That is dutiable goods. And essential ingredients of section 12 is the levy of custom duties on goods. The levy of custom duties on the goods. The goods must be imported into India and or exported from India. The rate at which the custom duty is levied, the same is specified in the Customs Tariff Act 1975 or any other law for the time being in force. The rate at which the custom duty is levied, the same is specified in the Customs Tariff Act 1975 or say any other law for the time being in course. then government goods are treated at par with the non-government goods. That means what? Even if the government, central government or state government is importing the goods into India, until unless the same has been specifically made exempt, they are also liable to what? Pay the custom duty. And the levy of custom duty is subject to the exceptions as provided in this act and say or any other law for the time being in force. So charging section states that the levy of custom duty is on importation of goods into India or say exportation of goods from India. So what is a taxable event? Importation or exportation. This is a taxable event. Importation of goods into India or exportation of goods from India. Now section 15 is very, very important. Section 15 is very, very, very important. It's the most important section because you can do the practical question only when you understand on which date the rate of duty will be levied. So here for section 15 is dealing with what? Date for determination of rate of duty and tariff valuation. Date for determination of rate of duty and tariff valuation in case of imported goods. Date for determination of rate of duty and tariff valuation in case of imported goods. So here if we have for import, the importer has to file bill of entry. So if bill of entry for home consumption is filed, that means we are clearing the goods from the port. So which date the rate of duty will be applicable? That is the date of presentation of bill of entry. It is the date of presentation of bill of entry or date of entry inwards of vessel or arrival of aircraft or vehicle, whichever is later. Say here the rate of duty and tariff valuation in case of imported goods is what? The date when the bill of entry for home consumption has been filed. It is the date of presentation of bill of entry, importer has to present bill of entry, or date of entry inwards to the vessel or arrival of the aircraft, say vehicle, which I say later. So for example, if bill of entry is filed on 15th of February, okay, and the rate of duty at that particular point of time was 10%, and entry inwards is given to the vessel on say 25th of February. You file the bill of entry on 15th of February and entry inwards is given to the vessel on 25th of February and the rate of duty prevalent at that particular point of time is 7.5%. So bill of entry or entry inwards which was later, rate will be applicable is of what? 7.5%. Or say if the bill of entry has been filed on say 28th of February and rate of duty on that date is again enhanced to say 10%. So in that case bill of entry is the 28th of February, entry inwards is of 25th of February. So bill of entry or entry inwards which I say later in case the goods have been cleared for home consumption. Remember, this is very, very important. You will be able to solve practical questions. They will be giving you what? Bill of entry date as well as entry inverse date. So rate of duty has to be taken on the date of what? Bill of entry or entry inverse, whichever is say later. But exchange rate for converting foreign currency into Indian currency or vice versa, as the case may be for import export. Here it will always be of the date of presentation of bill of entry or shipping bill in case of export or bill of export. Exchange rate always be of the date of presentation of bill of entry, shipping bill or bill of export. And exchange rate as announced by the Central Board of Indirect Taxation and Customs will be taken. They will be giving RBI rate, they will be giving CBIC rate. So we won't be taking RBI rate, we will be taking CBIC rate on the date of presentation of the bill of entry. Custom duty rate will be always of the date of presentation of bill of entry or entry inverse, say whichever is later. So here first case is in case the goods have been entered for home consumption. That is means what? We have presented the bill of entry for home consumption, then the rate of duty will be of the date of the presentation of bill of entry or date of entry inwards to the vessel or arrival of the aircraft or vehicle, whichever is later. So this is very, very important. Then if you have, first of all, you have presented what? Say bill of entry for warehousing. You have presented bill of entry for warehousing. That means what? The goods are deposited in custom warehouses. The goods are deposited where? In the custom warehouses. And now here you will not be required to pay the duty, you have to execute the bond. You have to execute triple duty bond. Then what happens? Subsequently, when the importer want to clear the goods from warehouse, what he has to do is, if want to clear the goods from warehouse, he has to present what? Ex-bond clearance. Bill of entry. Yes, again present what? Another bill of entry, that is ex-bond clearance bill of entry. So if the goods, in case of say warehouse goods, the rate will be applicable. Rate of custom duty will be applicable of the date of presentation of what? Ex-bond clearance bill of entry. Rate of custom duty will be applicable of the date of presentation of ex-bond clearance bill of entry, and in any other case it will be what? The date of payment of duty, smuggling, etc. It will be the date of payment of duty. This is very, very important, most important section of the customs. So in case the goods have been cleared from warehouse under 68, it is a date of presentation of ex-bond clearance bill of entry for home consumption under that section, and in any other case it is what? The date of payment of duty. In any other case, it is the date of payment of duty. Then the provisions of section 15 will not be applicable in case of baggage and goods imported by post, because separate provisions have been made in respect of baggage and goods imported by post. When we present the baggage declaration, then on that date the rate of duty and tariff valuation is there. Then section 16 is relating to what? The date for determination of rate of duty and tariff valuation in case of export goods. The date of determination of rate of duty and tariff valuation in case of export goods. So in case the goods have been entered for export under 50, that means what? You have presented, say, shipping bill, or say bill of export. You have presented shipping bill or bill of export. Electronically you have to present shipping bill or bill of export. It is a date on which the proper officer makes an order permitting clearance and loading of goods for exportation under 51. So the date when the proper officer makes an order permitting clearance and loading of goods for exportation under 51, of that date the rate of duty and tariff valuation will be applicable in case of export goods. It is the date on which the proper officer makes an order permitting clearance and loading of goods for exportation under 51. And in any other case, it is the date of payment of duty. And here, the provisions of section 16 shall not apply to, say, baggage and goods exported by post. Baggage and goods exported by post. Section 15 and section 16 are the most important ones. So what section 16 provides is, section 16 provides a date for determination of rate of duty and tariff valuation in case of export goods. Basically it is when the goods have been entered for export, that is we have presented shipping bill or bill of export. It is the date when the proper officer makes an order permitting clearance and loading of goods for exportation. And in any other case, it's the date of payment of duty. Then we have section 17, that is assessment. What basically assessment is, we have already seen that here it's a procedure which is adopted for fixing the duty liability by correctly classifying the goods and valuing the goods. And section 17 contains the provisions relating to what? Assessment of duty. So here in customs also, like in GST and income tax, we have what? Self-assessment. We have what? Self-assessment. That is the importer, he has to present what? Bill of entry. He has to himself classify the goods. That is the tariff heading he has to determine. He has to himself value the goods, and then, he has to himself assess the duty. So an importer entering the imported goods under section 56, that is what? When the bill of entry is presented by him for clearance of the goods, or say the exporter entering any export goods under 50, when shipping bill or bill of export is presented for clearance of export goods, they shall assess the duty, if any, leviable on such goods. They will assess the duty leviable on such goods. However, if any goods are to be deposited, the goods can be deposited in warehouse without assessment if they are to be supplied as stores to a foreign going vessel or aircraft. So stores can be warehouse without assessment as provided in section say 85. Now here, when we have presented our bill of entry or say shipping bill or bill of export, the department will see whether you have made the proper classification, whether you have made the proper valuation. For that purpose, they can go for the verification and say examining or testing of goods. So the proper officer may verify the entries made under 46 or 50, okay, and whether the self-assessment made by the importer or exporter is correct or not, and for that purpose he may go for examination and testing. And basically the selection of the cases for verification, it may be primarily on the basis of risk evaluation through appropriate selection criteria. Then for the purpose of verification, as you are aware, they are doing the assessment. They can call for the information. They can call for the information or document from the importer and exporter, and the importer exporter will produce the document or furnish the information. And in case, if it is where on the verification it is or examination or testing, if the same is found that self-assessment is not done correctly, then in that particular case, the proper officer may reassess the duty leviable on such goods. The proper officer may reassess the duty leviable on such goods. And however, such reassessment will be subject to, will be without prejudice to any other action. So you have presented the bill of entry, shipping bill or bill of export, making the self-assessment. They have done the verification, and in case they find that your assessment is not proper, then they can go for reassessment. And here, if reassessment is contrary to the self-assessment, this is important. Remember, if reassessment is contrary to the self-assessment, then unless the importer and exporter confirms his acceptance of the reassessment in writing, then in that case the proper officer will pass a speaking order. Proper officer to pass a speaking order within 15 days from the date of reassessment of bill of entry. Why? Or shipping bill or bill of export. Why? The speaking order, so that importer exporter can file appeal against the order. So where any reassessment is done is contrary to the self-assessment done by the importer exporter, and in cases other than those, the importer exporter, as the case may be, confirms his acceptance of the said reassessment in writing, the proper officer shall pass a speaking order on the reassessment, and such speaking order is to pass within 15 days from the date of reassessment of bill of entry or shipping bill. Then in cases where the importer is unable to determine the classification, where the importer is unable to determine the valuation, he can go for what? The provisional assessment. So in which cases, this is important also, you remember in which cases provisional assessment can be resorted. The provisional assessment can be directed by the proper officer where the importer exporter is unable to make the self-assessment, where the proper officer deems that the goods to be subject to chemical or other tests, then also the goods can be, say, provisionally assessed, or where the importer exporter has produced all the necessary information, still the proper officer wants to make further inquiry, or if where necessary documents and information has not been produced by the importer and the proper officer wants to make, say, further inquiry in these cases. So one of the cases is when he cannot make the self-assessment. Other one is when the proper officer wants the goods to be chemical, subject to chemical or other tests. Then importer exporter has produced the information, still they want to make further inquiry, departmental officers. And where the necessary documents have not been produced or information has not been furnished, the proper officer deems to make further inquiry. Now here, in case even if you want to go for provisional assessment, bill of entry is required to be filed in case of, say, provisional assessment also. And where, say, pursuant to provisional assessment, if any document or information is required, then the proper officer, say, will finalize the assessment basically when the information and documents so furnished by the importer exporter to the proper officer. And for this purpose, you are required to furnish the security also. Proper officer may require that the importer furnishes sufficient security. And here you will be required to pay the differential duty. The same is required to be paid along with interest at rate of 15% per annum. Now this interest will run from the first day of the month in which the duty is, say, provisionally assessed till the date of payment thereof. So 5 lakh is there. You have paid provisional duty. Final duty is 8,50,000. So this 350 will be required to be paid along with interest at rate of 15% per annum. Now this interest will run from first day. If the provisional assessment was made on 15th of July, this interest will run from 1st of July till the date of payment of rupees 3,50,000. So 15% per annum is the interest. And in case if you want to deposit the goods in the warehouse, you will be required to deposit a bond of the, here it is twice, basically if the warehousing bond is of, say, thrice of the amount of the duty. Then if provisional duty paid is more than the final duty, then you will be entitled for refund. And if the refund is not granted within, say, 3 months, if the amount is not refunded within 3 months, then interest will be paid at rate of, say, 6% per annum. Then officers of customs, officers of customs are there. Here we are having the principal chief commissioner or chief commissioner, principal commissioner, commissioner, peace, joint commissioner, deputy commissioner, assistant commissioner and other officers like inspectors, superintendents, appraisers. Okay. Then we are having section 8 is what? Power to approve lending places and specify the limits of the custom area. There is principal commissioner or commissioner of customs has the power to approve the places in any custom port, custom airport, coastal port for unloading and loading of goods or any class of goods and say specify the limits of the custom area. Then we are having the appointment of at boarding station. The principal commissioner or commissioner of customs has the power to appoint what? The places where the disembarkation from vessels will be made. This is a boarding station. It may be at custom port, custom airport. Okay, boarding stations are there. Then remember who has the power. So power to approve the landing places vests with the principal commissioner or commissioner. Power to approve boarding stations vests with what? The principal commissioner or commissioner. Then power to appoint custom port, airport, etc. It vests with whom? The Central Board of Indirect Taxes and Customs. So they will appoint ports and airports, which shall be the custom port and airport, inland container depots, land custom stations, okay. Then the routes, inland routes, coastal ports, post offices, which will be what? Foreign post office and international courier terminal. So this was about our introduction aspect. You just remember section 15 and section 16 are the most important ones. Besides section 17 is there. 15, 17. Besides this we are having section 19 also. 19 is dealing with what? Liability of goods imported in sets. Just an idea. Liability in case goods are imported in sets. If say A, B, C are goods which is imported in a set, these are the articles imported in set and duty is leviable on the basis of quantity. If duty is leviable on basis of quantity, then in that case duty will be levied on basis of quantity. Then on value, if duty is leviable on value and we are having the set value, we don't know individual articles value, and if the goods are liable at same rate, say it is 10%, this article is liable at 10% and this article is also liable at 10%. On entire set value, 10% will be levied. But if this is liable at 20%, then on entire value, highest rate will be levied. If goods are liable to duty and duty is leviable at different rates, then highest rate will be levied. And in case the goods are not liable to duty, they are imported in set, they will also be liable to duty at what? Highest of the rate. Say EC is exempt from duty, B is liable to 10%, A is liable to 20%. We know the set value, we don't know individual values. Then on entire, the value, 20% duty will be what? Levied. So this is about what the introduction aspect relating to the, customs. Then we will be going for the tariff and the other aspects relating to flow pattern, duty drawback, warehousing, etc.